Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. A lower indecisive spinning top yesterday that despite this was still a fourth bearish black crow after the previous session's bearish closing black Mariposa. So we are back below and within the broken upper trend line, currently at 116.46 of the bright red early July to mid-September descending expanding wedge pattern, as well as many of the moving averages, notably the nearby mauve medium moving average overhead, currently at 116.58. And that's of the more recently breached. However, as we are still sliding along the upper trend line, currently 115.66 of the more recently breached dark blue mid-September to mid-October descending wedge pattern. Both of these patterns have been disappointing in trying any attempt higher. Enough that I retired the potential targets topside, if not the patterns. We've also ended up beneath all the moving averages, apart from the long moving average, which is still some distance below. Right now we are just sitting on the November 2020 low at 116.02, or just below it. It very much seems as if the market cannot quite make up its mind which way it wishes to go, and as a result has generally headed sideways. However, there is one other feature which I need to bring to your attention. It's something that I've now said repeatedly since about March this year. We are set up with nearly 10 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then would be on. Anything in between would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, nothing much, still sitting on the November 2020 low at 116.02 or just below it. Seems the market may be waiting for something still. Cable, aka sterling against the US dollar. A lower possible indecisive spinning top pattern yesterday that was nevertheless still a fourth bearish black crow, and a continuing follow-on low from the recent bearish closing black Mariposa. We seem to have formed since early August to mid-October, and it's also a possible head and shoulders topping pattern, one that has become a little complicated since last week as prices try and punch down through not only the bright red neckline of this pattern, which is currently at 133.03, but also the purple neckline of a previous mid-May to late July head and shoulders top, which is currently at 133.33. as well as the congestion zone below between 132.46 to 132.98. There's quite a lot to go through all told. Now yesterday we managed to punch down through the purple neckline but not close below it. Additionally, rising rapidly from below is the gold long moving average support, currently at 132.29. It all starts seeming formidable. Well, it is, but the action since mid-May to date can also be seen as a possibly quite large double top pattern. And with all the overhang overhead, it would seem to be a reasonable force to tackle the supports, however much they may number. I'd keep a close eye on the gold long moving average as it enters the 132.46 to 132.98 support zone. And that should be sometime next week. As far as today, well, a further attempt lower, down once more below the purple neckline, though stopping short of fully establishing below it just yet, and seemingly trying to wriggle out of pushing too far lower right now. US dollar against the Japanese yen. A dragonfly doji pattern yesterday, if at an unusual place, as this is usually seen as a bullish reversal pattern at the bottom of a move. It was nevertheless still a follow-on from the recent bullish engulfing pattern. Prices continued their move up and away from the 50% Fibonacci line, the July 23 to July 24 move at 149.61, and also the 50% Fibonacci line for the 2024 move at 150.76, as well as the August 1990 high at 151.58. The market also tested once again the combined highs of October 22 and November 23 at 151.94 and 151.92 respectively, but closed once more right in amongst them for a second consecutive session. The overall pattern for this recent market remains the April 2025 to date bright red bull channel. It's currently 147.13 to 153.16, and we are towards the top end of that breached, though still valid pattern. In the bigger picture, we're also still within the important large, shallow and longer term early July 24 to mid-January 25 bearish shift pitch hawk, and we're closer to the dark blue upper time, which is currently at 154.26. Now so far today, a push up and away from the combined October 22 high and November 23 high, and up to test the next resistance, the lesser Fibonacci line at 152.52, which it is trying to edge up over at the moment. Beyond this, and we start looking at the bright red upper time as the next resistance. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday, which was a little disappointing as the previous session had been a hammer pattern. However, its hammer somehow ties in with the previous two patterns that also been indecisive doji cross and indecisive spinning top. Overall, the market is below all the moving averages and continues to travel down the attractor of the bright red extension to the lower trend line of the mid-January to late April 2025 descending triangle pattern. It's currently at 712.43. Overhead, we have Fibonacci congestion between 714.48 to 714.95 plus the green short medium moving average currently at 713.94 and the medium moving average currently 715.68. as well as the dark blue neckline, currently at 715.63 of the January to April 2020 reverse head and shoulders bottom. Now this last one had been good at capping prices after being broken on the downside back in late August. Meanwhile below, well, there's not much bar the congestion between 706.32 to 706.57, and that's made up from the 50% Fibonacci line, the October 22 to April 25 move, and the June 23 low, respectively. However, the market has until recently seemed shy of testing that far down, stopping in mid-September at 708.45. So far today, nothing much. Looking like an indecisive pattern in the making right now. US dollar against the Brazilian real. A second bullish white soldier yesterday and a follow-on to the previous session's reactionary bullish thrusting pattern. Prices pushed back up and closed over the green short medium moving average, currently at 539.36, which looked like it might cap prices, but then didn't, and was supported by the August and July 2024 lows at 537.59 and 536.76 respectively. However, the market stopped at the next hurdle, which was the 61.8% Fibonacci line of the October 2019 to December 2024 move at 541.57. Overall, in the big picture, the market continues within the finessed bright red mid-December 24 to mid-April 25 bearish shift pitchfork, sitting a little under the bright red middle time, which is currently at 545.33. We have near to this time two other features, and that's the declining mauve medium moving average, currently at 544.99, which has astonishingly traveled down with the middle time since about June, and the dark blue neckline extension, currently at 543.73 of the June to September 2024 head and shoulders continuation pattern, though I suspect this last one is less of an influence these days. Below the market, we have a couple of 38.2% Fibonacci lines to look out for at 532.15 and 527 even, and then the 61.8% Fibonacci line at 524.07. And then not much until the 50% Fibonacci line, the October 19 to December 24 move of 513.82. US dollar against the Mexican peso. An indecisive spinning top pattern yesterday after the previous session's second bullish, if small, white soldier. The market since about mid-September seems to be held within a small bull channel, which is currently 1836.48 to 1870.61. The immediate resistance, which seems effective on a closing basis, is made up from three parts. Firstly, a lesser Fibonacci line at 1850.81, then the February 2020 low at 1851.71, and finally the flatlining green short medium moving average, currently 1851.33. Further overhead is the rapidly descending mauve medium moving average, currently at 1863.70. Recently, we had seen prices test down to reach the primary target 1831.80 for the move down from the recent rectangle pattern formed from the cap on the market. And that congestion is between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and 1885.40, and then below by the very significant pairing of the February 2020 low at 1851.71 and along with the 61.8% Fibonacci line of the big old April 21 to April 24 move at 1850.81. Now the secondary harder reach target has been retired, as I think its time is now truly up. So far today, nothing much. A little higher, but then back down to where we started.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.